Hello and welcome to another update video about FET. So on the FET chart, the price has actually made that one more high that was required for wave 5. I have to say though, very shallow wave 5, especially compared to the length of the wave 1. Valid though. Valid, we have enough waves to the upside to call wave 5 complete. But I've already posted it on Telegram earlier today that I cannot rule out further extensions directly to the upside within wave 1 because, as I said, the wave 5, I mean, again, minimum requirement for a wave 5, well, we need to see it break above the third wave high, ideally to the next fib. I better would have been higher, but it's not done that. So therefore, I highlighted that I will leave the support area where it is for now in case this was just a high B wave and the wave 4 is still in the making and we get another wave 5 later. It's just that below the 81.3 cent level, there's a support that you already knew about yesterday. Only below that level, I can confirm that something different is going on. And I mean, yeah, we can call it 5 waves complete. It's just that the wave 5 was so shallow. So therefore, I would not be surprised if we see any further extensions directly from here to the upside, okay? But we'll keep an open mind. At the moment, the local trend is down clearly. The structure suggests a wave 1, a wave 2, a wave 3, and 4, and 5. Yeah? So it's done what it needs to do. Also, a wave 5 often reaches the 1.786 extension. It's just that when the wave 3 already reaches the 1.618, which it did at $1.03, well, technically the wave 5 should go a little higher. That's why I'm a bit skeptical to basically confirm that this wave 5 is already over. Because with that scenario, then we would have all 5 waves complete. And if we have all 5 waves complete, we can watch for a 3-wave pullback, corrective wave, which would be wave 2. Why is that important? Well, after 5 waves up, basically this entire move, well, usually would get corrected. So the entire distance here would need a correction. And that means we have a standard support zone for this wave 2, which is in the yellow box and between 59.9 cents and 81.9. It just doesn't have the right 5-wave look yet to me. So therefore, we keep the door open in case this was just a high B wave. How would that work out in the alternative scenario? So we zoom in a little bit. You see that here actually. So in the scenario in which we had a high B wave, the move down was not wave 4. The move down to the Tuesday low on the 20th of February to round about 87.3 cents. It was just an A wave. The move up was not a wave 5. It was just a B wave. And the move down now is not wave 2. It's just a C wave of that wave 4. And then we could still get another wave 5 afterwards. Yeah, the nano structure or microstructure here is just not clear enough yet. Therefore, I work with the fib levels here. And looking at the fibs, you see that the 81.3 cent level is still support. So I would keep that let's say, the fine line or the line in the sand that distinguishes between one more extension in wave 5 and wave 1 is complete. So wave 5 of 1 is complete and we're pulling back into this larger support zone. That's the line in the sand, the 81.3 cent level. You see that's anyway, if we break below this, we're already in yellow, but therefore that is where one scenario morphs into the other. Very short term, it looks now as if we have a local downtrend at least, and it takes a break above, well, minimally, what is that, today's high? Second here, this swing high at around $1.025, okay? If we get above that level, that would be a first indication that some kind of a low is in place. And be aware, if we have this ABC with an overshooting B wave, then obviously because it's an overshooting B wave, the C wave might end above A. That's just a typical feature of B waves. When they overshoot, the C wave obviously has a certain length, but the higher the B wave, also typically the higher the C wave ends. But yeah, lots of red today in the market. We had a few good days recently, and then typically after a few good days, the corrections start again. So that's what we're dealing with at the moment. Don't think there is much more to say about this. Obviously, in terms of maybe the next target, let's assume wave 1 is complete. Let's assume this is now a wave 2 pullback. Again, even though I don't like the 5-wave look yet, we can calculate roughly a target for a third wave. But I have to make some assumptions because the wave 2 hasn't formed yet a low. At least there is no evidence for a low in place in this wave 2. Let's just assume it might go to 74 cents, which is the 50% retracement level. Then a target for a third wave, ideal target, would be $2.14 plus. That gives you a bit of an orientation for that third wave. But yeah, don't think there is much more to add. Support levels are clear. Sometimes we also say that a wave 2 tends to finish where a wave 4 of the lower degree ended. Now that would be an extremely shallow wave 2, because the wave 4 ended here around 88 cents. Would be very shallow, would even be above the yellow support zone. And to be honest, if that happens and we form a low in that region, then I would still count the rally as a still unfolding wave 1. But does it make a difference? Not so much. Both scenarios are bullish at the moment, and I would only change my, let's say, my perspective about this chart from a bullish one to a bearish one if there is a break below 59.9 cents. I can use that lower support area now in region because we have a potential 5-wave move to the upside. Okay, that's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.